It's surprisingly simple to become a millionaire if you start early and use the right retirement account. Let me show you how. Today I will show you how a Roth IRA works, who can use one, the difference between a traditional IRA and a Roth IRA, the math behind it that makes it so powerful when you start early. And by the end of this, you'll know if this account actually makes sense for you. First, what is a Roth IRA? IRA stands for Individual Retirement Account. This account was created to help you save for retirement. Roth is named after the Senator, William Roth Jr., in the 90s who wrote the bill. Roth IRA is an IRA where you contribute money that you've already paid taxes on. This money gets invested and over time it grows. That money that grows is tax-free at retirement. So pay taxes now, so in the future you don't have to. Your future self will thank you for it. Now let's compare the Roth IRA versus the traditional IRA. With a traditional IRA, you don't pay taxes on the money going in. It is deferred, so you get a tax write-off now. When you go to withdraw it, you then have to pay the taxes. With a Roth IRA, you pay the taxes now as you contribute the money, and over the years it grows, and all its growth is tax-free. But you don't get the tax deduction in the year you invest it. So here's the big difference. With a Roth IRA, when it grows to $1 million, that $1 million is yours to keep. With a traditional IRA, that $1 million, when you pull it out, you owe taxes on it. And that can cost you hundreds of thousands of dollars. So traditional IRA, tax break now, pay later. With a Roth IRA, pay taxes now, all growth, tax-free. Now let's look at the math. Here's an example, not financial advice. The year is 2026. You're 18 years old. You decide you're going to max out your Roth IRA contributions. You invest that money into the stock market and get an average return of 10.5%. Here's what happens. Around the age of 46, you hit $1 million. The age of 53, you hit $2 million. You go to the age of 65, and you now have $7 million in your Roth IRA retirement account. Now retirement's looking pretty good. And all you did was the Roth IRA. That's the power of compound interest over time. Now let's talk about who can actually do this, because there are some restrictions. The first thing is there's no age requirement. You can literally do this for your child. The second requirement is you need to have earned income. So this means you have to be doing something to bring the money in, not passive income. There are some contribution limits. If you're single, not married, you have to make less than $153,000 a year. Or if married, $242,000 combined income. When you exceed these amounts, the amount you can contribute to your Roth IRA phases out. If you're under these amounts and you're single, you can contribute up to $7,500 up to age 50. 50 and above, you get the catch-up benefit and you can contribute $8,600 a year. By the way, these contribution limits apply across all your IRAs, Roth and traditional. For the Roth IRA, here are some of the big benefits. Growth is tax-free. No forced withdrawal. Most retirement accounts do have a forced withdrawal. Roth IRA does not. But there are some drawbacks. There are no tax benefits for today. So the year you invest, you don't get the write-off. There are income limits. There are penalties if you overinvest or break the rules. Lower contribution limits than employer plans. Some common mistakes: over-contributing, ignoring income limit rules, leaving money in the account uninvested, misunderstanding withdrawal rules, forgetting to name a beneficiary. These mistakes cost real money. So who is a Roth IRA ideal for? People who are early in their careers, people who expect to make more money in their later years and be in a higher tax bracket, people who understand the value of tax-free money in their retirement years. In the next video, we're going to go deeper into the difference between a Roth IRA and a traditional IRA, common mistakes, and even the Roth IRA versus a 401. Thanks for making it to the end, and as always, follow for more.